rising, and the stocks are inexpensive, and there's no expectation of a great year for the steel business. And I think we're going to get one.
And the raw materials area, which has really been kind of an outperformer in the down market. I mean, since October 9th, for example, basic materials have been one of the best performers going back to the peak of the market last fall. You're still looking around in the industrials area?
Industrial materials are going to be leaders in the market. And they're leaders because if you look at the emerging markets, the emerging economies, they're strong. Retail sales in China in the first 2 months of the year are up 20%. That's an accelerated rate of growth. And there's 3 billion people in the emerging economies that need infrastructure, and that is a big demand for industrial raw materials. And so what people who get negative on the market because of financial problems don't realize that there is really a very robust look for those parts of those companies that are dependent on the emerging economies. And you can make a lot of money doing that. I remember when the stock market went nowhere from 1976 to 1980 because of rising inflation. If you had the right stocks, you made a lot of money in a flat market. And I think that's the kind of outlook we have going forward.
All right, let's bring everybody else in. We've heard from the great Ken Hebner. Now, John Brown, you agree with S&P, right? The worst is over in the subprime credit crisis?
No, I don't.
Oh, you don't?
No.
I'm shocked to hear that. Please explain your position.
I agree with some of what Ken said, and as you've often said on this program, the subprime is a minor part of the real estate market, but it's a very important. What Secretary of State Paulson said today, Treasury Secretary, he said today, the deleveraging in the real estate market as a whole is something like $10 to $12 trillion, and that is what has got to be squeezed out, of which the subprime is a small proportion.
But it isn't all going down, John. I mean, it's not all going down. There's a lot of value in these loans. These mark-to-markets are based. See, what S&P is really saying today is they have a better feel for the valuation methods now. And in fact, after this whole crisis, everybody has a better feel for the valuations. And that's a huge part of the battle, because that means they may not have to mark down as much as they might have otherwise marked down.
I disagree. I think they're believing a lot of government propaganda, like the inflation figure, the GDP, where it makes Hurricane Katrina was a growth factor in the gross domestic product. These farcical figures, and then the denial of publishing M3, a money supply figure. I think these things are based on false criteria. There are $10 to $12 trillion of false monopoly money in the real estate, and that is being squeezed out.
Let me ask you where we are historically in terms of this cycle. In your judgment, is it 1931? Is it 1935? Is it 1937?
I'm sad to say I think it's more like 1931, where consumption got ahead of production.
All right,
so consumption is 72% of our GDP. We've got to favor producers, not consumers. All these government measures, whether it's Paulson or the Fed, are all trying to boost consumption. We're over-consuming.
Well, we should cut
the
corporate tax rate, Bob Stein, for God's sakes. That's really the end. Cut the corporate tax rate and abolish the capital gains tax. Hang on, Kevin. I want to get to your inflation commodities play in a minute. Bob Stein, we have the Wall Street Journal forecasters survey, 50,000 economists today, and they are predicting a mild recession. Let's look at this up on the full screen. First half GDP about flat, 0.2%. Consumer inflation by June, 3.5%. Unemployment by the end of the year, 5.5%. Second half economic recovery, however, 2% growth in the second half. So really the headline was somewhat misleading, because if there is a recession, it'll be a very mild one. However, Mr. Stein, retail sales sink today. I didn't say stink, I just said sink. What's your economic rebuttal to John Brown's 1931 scenario?
Well, it really looks more like the early part of 2003, when consumer confidence fell, when you had declining bond yields, you had declining stocks. But the economy boomed for the rest of 2003, right after it got through a slow point. Basically, yeah, retail sales were weak today, but retail sales only make up 40% of consumption, and the rest of it, 60%, services are going up. Exports are booming, and inventories are recovering this quarter, whereas they were weak last quarter. So we're going to have 2% growth in the first half of 2008. That's not a depression.
What about the second half of the year?
We think more like 4% with these rebate checks going out, and more importantly, loose monetary policy temporarily boosting economic growth.
You believe in rebate checks? I thought you were a supply sider. You're starting to sound like a demand sider.
Well, I don't believe with them for the long run, but they tend to shuffle when the growth occurs a little bit, and I think they'll steal growth from 2009 and beyond into the second half of this year.
Hey, Kevin Kerr, import prices 13.5% year on year. That's for 2 straight months now, January and February. But Kevin, having noted that, and there's the chart up on the screen, the fact is gold did pass through 1,000, but it retreated. Where did it close? 993, 994. Are you suggesting that maybe this commodity thing is over, done with, time to play into cash?
Well, I'll tell you what, I would not say it's over. You know, we have to look at this in 2 ways here. One, this is a long-term global growth story you and I have talked about now for a few years, yet it is a market, and they do correct. So we're seeing gold here at these levels. It's gone up, what, from, you know, doubled in, what, 6 months, it seems like, anyway. It's really ramped up quickly, and there's a lot of speculative money in this market. Now, there's fear of inflation. Maybe there's realized inflation in many areas, and we're seeing that speculative money pouring into gold. I firmly believe that at this level, we will see some of that speculative money come out of this market, and we'll have better buying opportunities lower. But longer term, yes, I think gold is going higher. You know, as we've talked about before, too, gold adjusted for inflation is only about halfway to where it should be.
Does that include energy in your riff here? You're backing off the energy play?
Energy even more so. You know, oil at 109, I was saying we definitely will see a correction. At 111, I'm wondering, you know, what time is it? We should be seeing it now.
Would you short it, Kevin? Would you short it?
Now, that's another question. You know, I probably would at this level, and I would have to be a little cautious. I'd have to be willing to hold it up to 115, 117 at some point, and not too far in the distant future. I think we will see a correction. I think it will actually be next week when we see the April contract come off the board. We see some profit taking. We got plenty of oil on the market. We had a report this week, an extra 6 million barrels. Right now, it's time for a correction. Then we will see oil prices proceed higher as we get into summer and fall.
Now, I want everyone to chime in on this, but let me stay with you, Kevin, but I want to hear from everyone. In an interview yesterday, President Bush really hinted at some different language regarding the dollar. He came out pretty strong, and he says he's for a stronger dollar. He didn't say a strong dollar would be in the national interest. That's still the Treasury's point of view, and they have not changed their rhetoric. But Mr. Bush seemed to change his rhetoric, Kevin. Now, I will be interviewing him tomorrow, and I'm hoping to clarify his point of view on this to see if, in fact, there is a change. Do you think there's a change? Did you hear anything different from the PBS interview with my old pal Susie Garib? And if so, would that cause you to short commodities? Because a strong dollar would be the death knell for this commodity bubble.
Absolutely, and I've said that all along. You know, the dollar, the weakened dollar, and now we have rumors now of another 75-point basis cut. Seems like an expectation, certainly putting pressure on the dollar. We saw it drop considerably today again.
Do you think he's changing his view? Is it possible?
It's possible. How much good it's going to do, I don't know. If there's another cut is coming, we are going to see a lower dollar, and we're going to see higher commodities prices.
Ken Hiebner, take a whack at that. The possibility the president is changing his language on the dollar. It is only a possibility. It is not verified. The Treasury Department, Mr. Paulson, today used the older kind of rhetoric, the strong dollars in the national interest. But it was interesting that Bush seemed to get out ahead in his interview yesterday.
Well, you know, our allies in the Middle East, a weaker dollar hurts them. It's creating inflation problems. He may have gotten a call from Saudi Arabia saying, hey, give us a little moral support here, because they're not happy to see the dollar go down. But having said that, they're always going to talk about a stronger dollar. I don't know what's going to happen to the dollar, but I do think that the fact that the commodities, oil and on these other commodities, are being driven by the strength of these developing countries. And I think commodity prices are going to continue to rise, and I think inflation rates are going to start to grow higher and higher. I think the 1 to 2 year outlook is for higher inflation and strong commodity prices.
Bob Stein, higher inflation?
Sure, and frankly, Larry, it doesn't matter what President Bush says. It matters what Chairman Bernanke does.
But wait a minute. It matters what the president says. When I worked for Ronald Reagan, and he repeatedly called for a strong dollar, now, he made sure his Treasury and Fed moved in line with his view, but the president is the top policymaker in the U.S. government. What, are you giving me some lefty view here? It doesn't matter what the president does? I thought you worked for the Bush Treasury. Are you turning tail? What are you doing with this?
Well, I'm telling you what I used to say inside the Treasury Department, which is it doesn't matter what we say. What matters is monetary policy. And until Chairman Bernanke starts disappointing the market with less rate cutting than is built into the yield curve.
Will he?
Hopefully.
Does the $200 billion package, they're swapping govies and they're taking back mortgages as collateral, in your judgment, does that mean at next week's Fed meeting, instead of doing 75 or 50, they might only do 25? Well, which, if they did that, the dollar would go up probably 6 to 8 percentage points.
Well, the market expects 75. I think they're going to come out with next week. And I think that will disappoint the market enough, and maybe the dollar will rally on that. These special programs the Fed are doing are the right course. They're a substitute for this scattershot, looser monetary policy that's just going to cause higher inflation.
John Brown, a quickie on the way out. You're going to come back, but you think there's a change in dollar policy? Was President Bush signaling something? And if Bob Stein is right, and the Fed, quote, disappoints the money market with a smaller rate cut, that could escalate a dollar recovery, and that could really put a little plunge. That plays right into Kevin Kerr's short the commodity scenario.
Yeah, I totally agree, and I think Bob was absolutely right. Don't watch the lips. Listen to watch the action. And the action, you know, the dollar is the share, the common stock of the United States Incorporated. And the world doesn't like it. It's sliding because they see the company.
So maybe they're taking action now. Maybe they figured it out.
Well, as they say, if rates don't go down as much as expected, that'll have a boosting effect.
Well, give us your forecast. There are a lot of ifs in this. I want to hear specific forecasts from you.
I think the political